Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook. On this episode, I interviewed Jade Laye. Jade is absolutely amazing. He is a lawyer, engineer, has 50, I think it was 55 single family homes. He has thousands of apartment units. I mean, I don't know how he has the time to do all of that. He is just an amazing investor, extremely successful, but really more importantly, just a really, really good guy. Awesome family man, and he is giving back in so many different ways. I hope you loved the episode. I had just an amazing time interviewing him. Thanks for listening. Welcome to the Passive Investors Playbook. I'm the host, Charlie Hardage. Today, I have the pleasure of speaking with Jade Laye. Jade is the founder of Laye Capital Investments and is a practicing patent attorney in Houston. He previously worked with the U.S. Patent and Trademark Office. Jade has been featured in the Houston Business Journal, American City Business Journal, and was given the honor to be on the 2015 list of top patent practitioners. Jade is an owner in over 3,000 units and is a very seasoned and experienced investor. His team consistently provides his passive investors opportunities to build and grow their wealth. Jade is also very dedicated to help his community become financially free, often doing public speaking or networking events where he shares his story and his path. Jade, I'm extremely grateful that you're a guest on the show today. Thank you so much for being here. Do you mind sharing with the audience a little bit more about yourself?
Sure. And Charlie, I appreciate the opportunity. So thank you for inviting me.
Sure.
So, I guess I can just start with my background. So, I'm trained as an engineer, a lawyer, but I decided to start investing in real estate probably about 12 years ago now. And it started out as just a way to supplement my income. And then, it turned into much more than that. So, definitely I can get into as much details about my journey into real estate, but I'd say it's good to have multiple streams of income, and I think real estate is definitely a great option.
I love that. It's very good to have multiple streams of income, and I know most people think they have multiple streams, but it's usually both partners working, right? Both multiple streams from W-2s, and that's okay, but I think people need to look at some other opportunities to invest. And so, like I said, Jade, I'm very grateful you're on the show. You have so much wisdom and knowledge, and thank you for sharing some of this with the audience today. I know you mentioned that you were looking for supplemental income.
Yes.
How did you get into real estate?
Well, it started out back in, I guess, 2008, 2009. We were looking to move out of our current home, and we put a contract on a new home to get it built. Our existing home was under contract to sell. During the closing period, the bottom fell out of the real estate market.
Gotcha.
And then the guy buying it backed out on us. And so I was in a position where I never wanted to become a landlord. I mean, I had no interest in it at that time at all, but I was forced into it. And so also around that time, I was introduced, actually my father introduced me to Rich Dad, Poor Dad.
Okay.
And so, um, God works in mysterious ways. So I believe he has a plan for all of us and, orchestrated things where everything kind of fell into place at that time. And so after I read Rich Dad, I mean, that really opened my eyes to, that started my financial education and just the way that I viewed money and my time and working for money versus having my money work for me. And it was a great time to get started in real estate, even though it was a lot of fear in the market. But I mean, there were great opportunities to be had. And so, yeah, I mean, that started my journey. So it was around 2009.
So kind of the accidental landlord, accidentally getting into real estate.
Yes.
From there, and you mentioned it was a good time to get in the market. And unfortunately, I know, home values went down across the nation by a lot. Obviously, some markets were hit much harder than others. But from the good side of things, I guess, you were able to get another property that was probably after 2-3 years went way up in value. Um, and while being an accidental landlord with your previous property, take me, I guess, on the journey from, like, what was the next step after you realized maybe, okay, there's something to this. You had recently read Rich Dad Poor Dad. How did you take the next step to go to deal number two, maybe, or what was deal number two?
Well, great question, by the way. So, um, after we got a tenant into our existing home at that time, you know, the tenant took care of the home, paid on time, and I was just like, wow. I mean, this isn't as bad as I always heard,
Yeah.
because you always hear about the horror stories. And so I said, and I was making probably, that house probably cash flow $25-50 a month.
Yeah.
I was like, okay, well, what if instead I actually bought these at a discount to where maybe I could cash flow maybe $500 a month per house? Maybe, okay, one or two houses. Yeah, I mean, that's okay. But I mean, as you get more, they really start to add up. And so at that point, I got a mind to, okay, so how many houses would I need in order to be financially independent? Meaning my passive income equal to my monthly earned income.
Mhm.
And so at that time, it was maybe 15, 20 houses. I said, okay. And so first thing I did was I got educated. So I joined a real estate education group where there was a lot of experienced folks that were landlords and they own, 10, 20, some even own hundreds of houses. I said, okay, well, let me join this group and actually learn from people that are already out there doing it. And that's where it started at. That was my next step, was to get educated, get a model to learn how to underwrite houses. How do you find houses? How do you finance the purchase? How do you find contractors? How do you manage a rental home after you purchase it? And so all of that, I learned from that formal education. So,
Okay, very cool. And how many single family homes did you have? And do you still have any?
yeah, I got up to about 60
60?
houses. Yeah.
Wow.
I currently own about 55 of them. So most of them I still own. So I started out buying in Houston, and this was back in 2009 or 10. I started out buying in Houston, and then I got up to maybe 8 homes here in Houston in between 2010 and say 2014.
Okay.
Then I felt like prices were getting a bit expensive here in Houston, even though looking back on things, I was completely wrong. But
Sure.
and so I thought, well, what if I look back at home? I'm from Arkansas, and so I thought, okay, well, what if I look back at home? It's probably not as competitive there investors aren't as sophisticated. I said, well, I may have more opportunity there. So sure enough, I went back home. I grew up just outside of Memphis. And so I went back home and I saw, okay, there was opportunity there. I put together a team, and just a manager and a maintenance guy. And that was around the time I officially started my real estate company.
Okay.
And I said, okay, well, let's start buying houses. Let's see how many I can buy. And I say, yeah, from say 2014 to maybe 2020 is when I bought, I went from like 8 to 60 houses. And so, there was a lot of houses to be buying. Yeah.
Wow. That's amazing. When did you make the move to apartments?
That was around 2015-ish when I said, well, man, these houses are great. I'm financially independent where I still enjoy working as a lawyer, but, I don't have to. And so, it feels a lot different getting up and going to work every day when, it's a choice.
Yeah.
Even though, of course, yeah, if you quit your job, okay, yeah, we probably have to tighten our belts a bit, but it wouldn't be, a panic where, hey, we would have enough money to come in and live, until I can figure out, okay, what's the next step. And so, but I was just always closing. I was always buying houses or rehabbing, and even though all of my houses were maybe in a 10 to 15 mile radius, but, it was still a lot of houses and a lot of rehabs. And it was just a constant thing all the time. So I was buying houses, rehabbing them, buying houses. And so it was just constant. So I said, well, houses are good, but is there a way to scale faster and to maybe get more leverage? Where, I didn't have to, run everything. I didn't have to push everything. And so that's what ultimately led me to apartments.
Wow. I love that story, Jade, because I think a lot of people they're interested in real estate in some capacity. And I know you do single family and multifamily as well. I love most types of real estate, most asset classes. But something that you do and I do is, we look for something that is pretty resilient to downturns in the market because it provides a basic human need of shelter. And, you went from 8 homes to 60 homes over a few year period. How were there any issues with vacancy there? Any issues with, I know you had a team as well, but any major issues in that over that 6-year period, or did it all go over?
Sure. No, one thing I've learned in real estate is expect problems. Most of those problems can be solved by money. And so as long as you have reserves, most of your problems are fine, okay? The only other issues that you have are people. Of course, there's not a lot you can do with people having issues, but as far as the real estate goes, as long as you have money and as long as you have the right type of debt, you'll be fine. So my approach was always, okay, every house I buy, I'm not going to touch any of the money I make. It's all going into a reserve account. Once I feel like that account for that house is enough, then any extra money, I'm just using that money to buy the next home. And so, when I first started out, probably the first 7, 8, 9 years, I rarely ever spent any of that money. It was like, no, we're using this money to grow the pot, grow. I want more chickens So when I do have to start taking the eggs, I'll have a lot of chickens laying the eggs. And so, but there are always challenges. I mean, early on, of course, you don't have a lot of capital. So, I mean, that was always, a challenge early on. Also finding a good team. If you're going to invest out of state, well, having a good team in real estate is critical anyway, but it's even more critical if you're investing out of state because people can really take advantage of you if especially your manager, your maintenance guy, he can really take advantage of you when you're out of state. And so I was blessed enough to have a man I consider a brother who was my maintenance guy. I grew up with him. My father mentored him, so I knew the guy and I knew his integrity and I knew that he would treat my properties like his. And so we met early on and said, hey man, listen, you have a maintenance business. I want to invest in real estate. Let's help each other grow. And hey man, you treat me right, man, we can grow. I'll send you a lot of business. And so he started out with me on like that first house, and it just grew and his business was able to grow. So, that was really crucial to my success investing, out of state. So
That's incredible that your dad knew him very well, mentored him, you knew him, and then both of the businesses have grown. It's very, very important to have a good property management team and contractors, whether that's single family or apartment complexes, because that can 100% make or break a deal.
yes.
So that's great that you have a team that you can rely on. Between the single family and the multifamily, you've been so successful as an attorney in your career. Like I said in the intro, you've been in numerous publications and list of top attorneys. Why do you think you went to real estate? Is it purely because Rich Dad Poor Dad, or what were some of the other reasons that you went into real estate as opposed to something else?
Well, I honestly believe it was, God's hand in my life. That's where I believe he directed me, number one. But number two, real estate just made sense. I mean, if you look at most wealthy people, either they hold their wealth in a lot of real estate or they made their wealth in a lot of real estate. And so the concept, the blueprint is there. So, I never wanted to recreate the wheel. And that's one of the things I learned by reading Rich Dad was, I would drive past real estate every day as, just a normal everyday kid or teenager, young man. And I mean, it was just like a whole world I had no idea even existed. And it wasn't until I read that book that it opened my eyes to, wow, I mean, it's people all around you building wealth.
Yeah.
But if you don't know, you don't know. And it's like all of that is like invisible. And so once I saw the blueprint and I saw real estate works, of course, hey man, I'm trained as an engineer. So I mean, I'm very skeptical. Show me the numbers. Plus I'm a lawyer, so I'm even more risk averse, skeptical, but I mean, after I looked into it, it was like, well, hey man, it makes sense. And it's an opportunity now, especially, back in 2008 and 9, when of course, I was new to real estate. There was a lot of fear in the market. And of course, you doing anything new, you have a lot of fear because it's the unknown. And I recall the first house that I bought, it's a house in Baytown, Texas. And man, I mean, it was a lot of fear. because I had never done anything like that. But, you know, I just remember saying, okay, Jay, you know, the numbers are what they are, you know. Stop being afraid, trust God. Okay, man, let's pull the trigger. And I mean, and that house that turned out to be like the best house investment I ever made. I mean, that thing probably cash flowed right before I sold it. It was probably cash flowing $700-800 a month.
Wow.
Now that's free cash flow in my pocket, you know. And then we sold the property maybe in 2018 or so, you know, made a lot of money. So I mean, it turned out to be a great investment. So
Yeah.
yeah.
That's great. I think um I'm risk averse myself, very analytical. And so it took me a long time to get started investing. And I read Rich Dad Poor Dad. I knew the benefits of real estate. I knew all the benefits, but I never got into a deal. It took me a very, very long time to get into a deal. And I think a lot of passive investors have that same issue of maybe they don't know where to start or don't know how to start. And to be honest, Jade, that's one of the reasons I started this podcast, because I wanted to say, you know, you and me, we're a lot like people who have never started before, except we did take action, you know, and maybe you took action a little sooner. It actually took me a long time to take action, but we both took action. And so for the audience out there, I would just say, and we're going to plug Jade's website and how you can reach out to him towards the end of the show. But Jade is very, very good. I mentioned in the intro, he does some public speaking. He wants to help people get into real estate. It's made a big impact on him, big impact on me. And so I encourage the audience to reach out to Jade, because he is a wealth of information and knowledge that he just loves to share with anyone. So I want to pivot a little bit and to kind of understand, and you touched on it a little bit earlier, Jade, but how did you come up with the capital for your first few investments?
First house, had a little money in savings, and then had to take the rest out of my 401k. So at that time, and I think you still can, you know, your 401k will allow you to borrow, you know, a certain amount of money from your 401k. And that's what I use as my seed money to get me started. Yeah.
Very cool. I think I'm not entirely sure. I think the limit is $10,000. I don't think there's penalties for it, except I think it is taxed. I'm not a CPA, but just to kind of shed a little bit of light on that. So you used part of your 401k. You had some cash for your next few deals. You mentioned that you had some money in like a reserve account and didn't really use your own money. I mean, kind of, but you had it in a reserve account to keep buying more.
Yeah. So, you know, now keep in mind at that time, houses were cheap. See,
Yeah.
And see, part of real estate though is cycles, opportunity, timing. You know, of course, being smart and not being fearful, and, you know, recognizing an opportunity and taking advantage of it. Okay. So a couple of things worked in my favor. I got in right after the market crashed. So the market was at the low point. Yeah. Houses were cheap. And I had a little bit of money. And when I say a little bit of money, I would say my seed money was probably 30 to 40 grand. And I used that to buy my first house, rehab it, probably my second house. And then by my third house, I had to come up with a different plan. So at that time, though, interest rates were low, houses were cheap, but rents were still high. So the houses would cash flow, you know, $600, $700, $800 a month.
Wow. So
what I was able to do, okay, at that time, I was a young attorney, so credit was good. I could get loans. And so I said, well, interest rates low, I can get loans. So my next step is I started taking out personal loans. Okay. To fund my next home. And so, and the houses would cash flow enough where I could still pay my note, interest, taxes, insurance, maintenance every month, and still have, $500-600 a month left over. And I could use that money in order to pay my note on the personal loan until I paid it off.
Yeah.
And so I was able to do that, for, I don't know how many houses I bought like that, probably 10 houses or so. And then from there, the next opportunity was banks were starting to, email me or mail me these things for lines of credit.
Yeah.
Hey, you can get a line of credit. It's an unsecured line of credit. I mean, it was basically like a credit card, and I could buy anything. I mean, I could buy a car, a house, And so I was like, I can get one of those, use it to start buying a house. And so I got a few lines of credit. And so at that time, what my strategy was is, man, once I saw the lines of credit were out there, I just started calling banks all around Houston, Arkansas to see if I could get lines of credit. And so I did that for a couple of years, and I probably got up to maybe 300K or so in just unsecured lines of credit that I could just go out and buy houses. And so my strategy at that time, since houses again were still relatively cheap, okay, and I was buying in Arkansas, at that time I could actually buy a house, fix it up. I had banks in Arkansas, okay, these were smaller community banks, not the larger banks, but the smaller community banks. And, and I had actually personally went and met bankers to see who would be willing to lend me money on real estate. And so I was able to work with maybe 3 or 4 banks around the state of Arkansas. And they would actually put debt on the properties right after I would rehab. So, okay, for example, I could buy a house in Arkansas, 3-bedroom, 2-bath house for about 30 grand. I mean, they were dirt cheap. I'm like, man, I can buy a house for cheaper than I can buy a car. It was a no-brainer. So I said, okay, so I would use my line of credit, buy the house. My maintenance guy, he can do everything. I mean, he had guys to do roofs to foundation if that's what I needed. I could probably get a rehab done for about 10K. So, all right, I'm 40,000 in, which maybe, closing costs, say, 2 grand. So I'm 42,000 all in this house. I own it cash. Then I would go back to my bank and say, hey, here's a house, rehab. They would appraise it. Of course, it would appraise for way higher than I purchased it for. They would give me a loan like 70 to 80% loan to value. And most times, though, I would only take enough to just get all my cash back out of the deal, even though I could have took more money, but I didn't because I wanted the houses to cash flow as much as they could. And so, okay, I'm 42K in. Yeah, let me just get a loan at 45,000. They would give me a loan. I would take that 45K, pay off my line of credit, and just do it over and over again.
Wow.
So I would start off buying one house at a time, but as my line of credit got larger, then I could buy 2 houses at a time, 3 houses. And I was just able to do that back and forth. And that was really how I was able to scale up that fast and buy as many houses. And honestly, the vast majority of those houses were purchased ultimately no cash out of pocket.
Wow, that's amazing. And how passive was that for you? I know you have the team, but how did you have like a general manager or someone that was doing most of the work, or was that all you?
Well, now keep in mind, I'm in Houston and these houses are in Arkansas and Memphis. When I first started, maybe the first 2 or 3 houses, I would actually go to Arkansas and look at them and all that. I said, okay, man, I can't keep doing this. I said, okay, well, I trust my maintenance guy. I mean, this man built his own house from the ground up. I
Wow.
mean, he got up one day and told his wife, "I'm gonna build you a house." I mean, and he figured out how to build a house. So he knew houses. He can do everything. I said, okay, let me just trust my guy. And so I said, okay, here's what I'm going to do. At that time, and even now, you can buy houses online, sight unseen. And so at that time, most of my houses, I bought them on auction websites. Because at that time, again, it was just a cycle, a lot of opportunities. So
yeah.
Foreclosures were everywhere. You could just get online and find lists in just about any county in the country. And I would buy them all that way. So I would find the houses. I would call my guy and say, hey, here's the address. Go take a look at it. He had his ways of taking a look at the houses. And so he'd come back and say, hey, Jay, yeah, this is what the house needs. I estimate it's about 10K. Everything else is good. And so since I knew the area, since I grew up there, I knew the good markets and bad ones. I would just buy in the good markets. And he would go and look at the houses, tell me, Jay, it's going to be X amount. And then I would just buy the house. Most of those houses I bought were sight unseen. Honestly, most of them I still have never been to this day. Oh. And I mean, I've owned them for years. Most of them I've never actually been to. But again, that's the importance of having a good team. See, yeah. Most people, I would never recommend them invest that way because I don't know how trustworthy the people are that they would deal with. And even in that, I had to go through a few like bad managers, sure. They weren't quite the right fit. But I know I had one guy that was basically like a partner. And he looked out for me and helped me find a manager and everything. So yeah, but that was how I was able to do it.
That's extremely impressive, Jade. Just buying something still to this day sight unseen.
Yeah, most people would say, Jay, that's crazy. Yeah, I mean, thinking about it, but I have a great team. So
yeah, and that's I'm if you're watching on YouTube, you can see me smiling, but if you're listening, you can't. But I've just been, I'm really amazed and impressed by this story of buying. And I was smiling earlier too a little bit, Jade, because you were talking about being risk averse, and then 5 minutes later you're talking about 300K and unsecured line of credit and buying stuff sight unseen. And so I mean, I love it because we've met multiple times. This is not the first time we're talking, but it is funny to see kind of you're risk averse, but you don't see these as risks, I guess is kind of my point. The normal person or the maybe uneducated person would see it as a risk, but it's not like you just jumped into it immediately. You did have some failures that we haven't really talked about, but with management companies, and you are very fortunate and blessed to have basically a brother, a really good guy that's like a brother to you and a family member to your family. Really do a lot of kind of the heavy lifting for you, both in terms of viewing the properties, telling you what's going on, and then actually completing that, which makes it a lot easier for you. And you've talked about teams and partners, a lot. And I want to transition to the multifamily side of things because you and I met obviously in multifamily meetups and conferences. And most of the audience is actually looking, they want to be passive investors. Mm-hmm. And I know it's for what you did, what you're doing on the single family, it's still probably not completely passive, but you went through a lot of issues and maybe failures or learning experiences at the beginning. So it's a lot more passive today than it probably was, 10, 15 years ago. Mm-hmm. But how, I'd love to get your take on on the teams in multifamily syndications and the group, the general partners. And I've explained this before, but in a multifamily syndication, you have the GPs, which are the general partners. They do the active side of things. And then you have the limited partners, the passive investors who they don't go to the property. They don't take phone calls from property management or tenants or anything like that. They're just a capital partner. But most of your properties that you've purchased are not in Houston where you live. Talk to me about maybe, you don't need to go into a lot of detail, Jade, but what is your role in these teams? It can vary. I totally get that, but what do you primarily look for to join a team?
Yeah, well, it really depends. I mean, my multifamily journey was a lot like my single family journey. Again, I just said, well, it worked with single family, so let's just apply the same blueprint with multifamily. So I joined an education group with people that were doing what I wanted to do. They own thousands of doors. So, okay, these are the folks I need to learn from. Okay, so one of the big things that I had to break out of going from single to multifamily was just a small mindset of just me doing everything, or at least me and a small group of people doing everything. In multifamily, it's more of a team sport, you know, and it's critical. And so it took me a while to kind of grow out of that. And so, but like I did in houses, I started off buying apartments here in Houston. And then once I got comfortable, then I started to branch out to other states. And so now, you know, when I first started out, I was the only, you know, general partner, in that I was doing everything from finding the deals, underwriting them, you know, raising equity, asset management, everything. I quickly learned that that's not the way to continue to scale, leverage. You know, real estate, honestly, is about leverage, and, you know, building wealth, in my opinion, is about leverage and just leveraging, you know, other people's time, money, you know. And some people may say, man, that sounds kind of bad, man. You're taking advantage. No, I didn't say you're taking advantage of people, but we all leverage other people. The great thing about multifamily is that you can leverage others and everybody wins. See, so my investors leverage my time, my expertise, my team's expertise. And at the same time, we leverage their equities. So, I mean, it's a mutual benefit, see. And so, and just like a job, I mean, your employer leverages the employees because they do the work, but also the employees leverage the employers because they didn't go out and start a company and take on risk of, you know, capital and all that to start a business. So, you know, multifamily is just great in that if it's done right, everybody benefits. Right. So now what I do is, you know, so, okay, to back up. All right. So I would start off, I was doing everything. Then I would, once I got experience and I started meeting other general partners, more experienced operators, they would call me to help them close transactions, whether it was raising equity or helping with the asset management. So I did that for a couple of years because at that time, I was so busy with my deals that I was the only general partner. I didn't have time to go out and find more deals. At that time, I just had to be more of a passive general partner, you know. And so I did that a while. Once I sold those assets that I was the only guy, then that freed up more of my time where I said, okay, well, now I can start going out and finding more deals. So probably the last 2 or 3 deals I've done, I've actually been the one to go out and find the deals, and then I bring them to my other general partners and they help me to close an asset. And
yeah, That's great. I do love what you said about leverage other people's time and money. And, there's a really easy way to think about that. Hey, can you drop me off at the store? Or I got to go pick up my car. You're leveraging someone's time and gas money, or you ask them for advice. You're leveraging their time and expertise. And, essentially when as a general partner yourself, when working with passive investors, there's a relationship there where they're both needed. You're both needed, right? Jay doesn't have the money. You don't have the money to put down, maybe 10 million, 15, 20 million dollars. I think your latest raise was what, 30 million? Is that right?
38 million.
$38 million. You may not have, well, and maybe you do have the money, but you don't want to put $38 million down on the property. And at the same time, a passive investor, if they want to buy that property, maybe they have the money, they probably don't have the experience. And so it's a relationship that's needed. And that's one of the many beautiful things about multifamily syndication that I think, Jade, is, you're coming together, and the really cool thing is it's just a bunch of normal people that are like-minded people that get into a deal together. You can be in a practicing attorney like you are. You could be a school teacher. You could be a nurse. You could be retired. In some of these deals, you do have to have a certain net worth, but that's only $1 million. And just a group of people can invest like billionaires, right? Like previously, and I know there's some deals that you probably won that there's huge hedge funds or institutions are looking at, but you win the deal because you have a solid reputation, people. And so it's really cool to say, oh yeah, we beat out, I'm not going to name drop any large institutions unless they want to sponsor the show, and then we can talk. But, it's really cool to say, oh yeah, I own 0.01% of this apartment complex, and Jade's my guy. And let me introduce you to Jade because it's life-changing for me. And with his team, his experience, his knowledge, they'll help you start building that, going on that path of building your wealth and growing it. So I love the multifamily syndication aspect, if you can't tell. And I know you do too, Jade.
Oh yeah. I mean, it's everything you said it is. I mean, because, and for a long time, these average people were kind of locked out of these investments. Mm-hmm. And so, even now, I think the market is just kind of starting to recognize us, as real viable buyers, owners, operators, even though the big institutions still, look at us kind of like, okay, well, you guys don't know what you're doing. You're, as, sophisticated as we are. Fine. I mean, I've dealt with those attitudes my entire life, so we just go a deal at a time. And, and we learn along the way. We've been fortunate enough to do well for our investors, but I mean, hey, I approach real estate very humbly. I mean, yes, I have experience, but I'm still gaining experience, especially now, in the market. It's a difficult market now, but it's also a lot of opportunities. Yeah. And so, I think if we're just smart, we're humble, and we keep an attitude of, hey, there's still a lot more to learn. I can get better. My team can get better. And we learn along the way, and we just keep improving. So, but great opportunities now.
Yeah, and I actually wanted to go a little deeper in that, because you mentioned that you got into single family right after the market crashed 15 years ago or so. And now there really hasn't been any besides COVID, there's not been any huge turmoil over the last 15 years. And I know COVID was big. I'm not saying that wasn't big. There's a lot of uncertainty there. But if I were to say, okay, Jade, now's not a good time to buy real estate, and maybe I've never done a deal, right? I've never invested into a deal, but I'm saying interest rates are higher. I just saw on the news last week that it's not a good time to buy real estate. How would you enlighten me? How would you educate me, saying, to nicely say, don't listen to the media?
Yeah. I mean, it's always since I started in real estate, there's always been fear.
Yeah.
I mean, when it was the best time to buy, the fear was at its highest. So anytime, I mean, like the great Buffett, he says, I mean, you're greedy when people are fearful, and being fearful when people are greedy.
Yeah.
And now, if you look around and see, man, it's a lot of fear, and it's still going up. I mean, the fear has not hit the max level yet. So now, yeah, I think it's a great time to start. Of course, you want to be smart, which you always needed to be smart. You don't have as much wiggle room now for mistakes, and so you want to invest with experienced people. But I think if you're experienced, if you know your market, if you underwrite well, if a investment pencils out now with interest rates where they are, my long-term view is interest rates are going down again.
Yeah.
If a deal pencils out now with these interest rates, you just buy it and wait, once as interest rates go down, it's a no-brainer. Values will go up. So, I think it's a good time now to get started.
I love that and totally agree with that sentiment, because typically, media is going to put stuff out there just to get headlines, but it's usually so broadly speaking too, saying, oh, real estate's going to take a dip. Well, what asset classes are taking a dip? Where is that? Is that national, or is that in, your current property you're working on that you'll probably have closed by the time this airs, but it's in Northwest Arkansas. Yeah. And that would be another show altogether on why Northwest Arkansas, on a town that probably 90% of people have never heard of in Rogers, right? So there's little things, there's nuances that most people don't know. But when you talk to someone like Jade or on someone on his team, they could rattle off 100 reasons why Rogers, Arkansas, 100 reasons on why now's a great time to buy. So just want to call that out, because I actually had a conversation earlier today with someone about it's not a great time to buy. And Jade, with your experience, I wanted to bring that up and see what you had to say. And
I mean, you hit the nail on the head. I mean, it's always, you need to ask questions, and all those questions that you just asked. What asset, what location? It's always local, man. I mean, you have to know your markets. Different dynamics in every market. Yes, some markets it's a bad time to buy. Some markets it's a great time to buy. So yeah, and I don't listen to the news and all that. I just want to know economically what's going on, what's going on with interest rates, what's going on with the Fed. But as far as folks' opinions on whether or not it's a good or bad time to buy, I tune all of that out.
Yeah. All right. What are your company goals over the next 9 to 12 months?
Well, next we're actually working on a ground up development opportunity. So I've been wanting to get into that space for a while, but I mean now is a great time to do that because rates are high, and so a lot of the experienced developers I know say, hey, you build when rates are high, and you refi and cash out when rates are low. So now, I think it's a good time to get into that now. And then, continue doing what I'm doing now, as far as buying value add deals in great markets, and just managing the stuff that we currently have and finding, exits out of that, out of those assets. So hey, man, it's opportunities, and it's stress on a deal or two, but I mean that's just what the market is now, and you have to navigate out of that and do the best that you can for your investors, while at the same time communicating, hey guys, it's still great new opportunities out here. So let's keep investing, a deal at a time, spread your money around, diversify your markets. And if you're consistent over time and if you're smart, you'll continue to build wealth.
Love that. Consistency is great. You mentioned this earlier, but some of those properties you bought in Baytown were pretty inexpensive when you bought them, and now who knows, probably gone up 3-4x over the time period. So,
Yeah.
Well, Jade, we have a few minutes left. Want to ask about a recent book that you've read that really stands out to you.
A recent book I read. Let me see.
Yeah, it could be real estate, business, self-help, or maybe you've reread something recently.
Yeah, well, I'm always a student of the Bible, so that's always, top of my list. But I would say the most recent book that I read is not really real estate. It's a book called Why Christians Get Sick. And so it's just a book about, eating more organic food. I mean, I think, a lot of times we have a lot of illnesses in, America, and just based on the diets that we eat. And so, I've been trying to clean up, the foods that I eat. So, that was an interesting book. The other book that I read is a business book called Boss Moves. It's by a guy by the name of Myron Golden. He gives some good pointers on how to start and scale businesses of any type. And so I like to read things like that and figure out, okay, how can I apply them to what I do?
Yeah, that's amazing. And then what can people expect to see from you in the business over the next few years? I know we kind of touched on that earlier. I didn't know if there's anything to add besides developing properties, looking for deals, and managing current portfolio.
Yeah, I mean, it's we're just gonna stick to what we're doing and stay consistent. Looking for opportunities. So we're just not out here buying deals to be buying them. I mean, especially now we're looking for good opportunities. And
Right.
so, I'm gonna continue to do that and continue to help as many people as I can build wealth.
Awesome. I love that. How can people reach you, Jade? What's the best way to reach you?
The best way would probably be to email me. My email address is my first name, Jade, Jade, Laye, Laye, at layeinvestments with an S.com.
Awesome.
And then, of course, you can also reach me on Facebook or LinkedIn. And if it's LinkedIn, search Laye Capital Investments, and you will find my profile.
Perfect. I'll put that in the show notes. And then your website is layeinvestments.com.
Yes, but it's not active now.
Okay.
I need to get it activated again. So that is something on the business side that I haven't done. And a lot of people are kind of surprised at that. Well, Jay, you've done over 3,000 doors, but you don't have like an active website. I said, no, I mean, I just meet people and
Sure.
I just believe that if you're genuine and if you treat people the way you want to be treated, that you don't need all that fancy stuff. So.
Yeah. And I know people with billions of dollars of assets that use a Gmail and have no website. And it's because people trust them, people
Right.
know them, people like them.
Right.
They've provided great returns multiple times. Jade, man, it's been an honor talking to you. You're a practicing attorney. You have several dozen single family homes, over 3,000 apartments. I don't know how you have the time, but man, I'm so impressed with you and with your story. I really appreciate you being on the show. I guarantee the audience did. They got a lot out of this. If they didn't, I know I did. So thank you so much for being on the show.
Thank you for having me, Charlie.
Yeah. Have a great day.
All right. Bye-bye.
Thank you for listening to today's show, brought to you by H&K Investment Group, your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing. Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.